What's up everybody, Gen X Dividend Investor here. In this video I'm going to respond to someone who freaked out on me in my comments calling me a liar, and I'll explain why you gotta be careful about believing everything you see on YouTube. I'll also show you some details of my YouTube channel that I've never shared before, and I'll go over some stuff about my favorite dividend ETF and SCHD, including its recent reconstitution and the giant dividend hike they just announced. Feel free to use the timestamps on screen to jump ahead to wherever you like, though I encourage you not to skip forward. Okay, so recently I checked my YouTube spam folder, which is a place where YouTube temporarily stores comments that it determines are inappropriate, and I found a comment that was totally unhinged. It was written in all caps and filled with pejoratives and crazy aggressive stuff, and so I deleted the comment and banned the guy. Honestly, it was so bad that I figured he was posting it from the Baltimore State Hospital for the criminally insane, or maybe he was in Arkham Asylum or somewhere like that. Putting his rage aside, the gist of his comment was that I was a liar because I said I wasn't adding more money to my portfolio anymore, but he found proof that I did because I had way more realty income shares now than I did half a year ago. And note, I ban people who leave insane comments and or that are disrespectful and or that post scammy stuff or things like that. I treat people with respect and I expect the same towards myself and towards anyone else in my comments. It's fine to disagree, but it's not fine to be mean or rude or whatever. And in case you're wondering, scam comment threads usually start with a message that doesn't really tie to anything I said in the video, and then that comment quickly gets dozens of fake thumbs up within seconds of it being posted, along with it gets a bunch of random scam responses, including ones that eventually talk about an awesome financial advisor or product that made someone tons of money. Now you'd think that in today's world that people would be savvy enough to realize that those are scam comments, but unfortunately there are a lot of people that are so desperate to make cash that they suspend reality and believe what they read. I ban scam comment threads almost every day, and usually ban every account that posts in those threads, so if you ever posted in one and you think you might have gotten banned by me, then just reach out to me on my Twitter X account, or on my Dividend Discord, or DM my Instagram, or even email me, and I'll try to unban you. In order to respond to all my comments, I tend to read things pretty quickly, and it's possible that I've sometimes accidentally banned someone rather than respond to them. I'll also give everyone a second chance if they did something disrespectful and you'd like me to unban you, so just drop me a note on my social media and I'll see what I can do. Anyway, as I was working on this part of my video, I checked my comment purgatory area, and sure enough found a scam comment on a recent video I posted. The comment goes, "LOL, just put some crypto into Munisy protocol, I've cashed out $900 already." So YouTube automatically hid that particular comment from the public, and the only person that can still see it is the original poster and myself, and he doesn't realize that his post is actually hidden away in the spam folder. There are different levels of comment moderation you can use for your channel, from none, which doesn't hide any comments, to basic, which holds potentially inappropriate ones for the creator to deal with, to strict, which is what I use, and that holds a broader range of potentially inappropriate comments, and finally all, which holds every posted comment until the channel owner deals with them. By deal with them, I mean you can approve the comment to be posted publicly, you can delete it, you can report the comment as spam or abuse, and you can also ban the user from your channel, which stops their comments from ever showing up publicly. The original trolls comment that I deleted and banned, and that influenced me to do this video, was talking about a video I did 9 months ago called My Dividend Portfolio Milestone, $3 million, $128,000 a year in divvies, and he compared that to a video I did 2 weeks ago called How Much My $3.3 million dividend portfolio makes per year, and he concluded that I was lying. Now, while his comment was written crazily, the reality is that 99+% of the comments I get are totally fine. And ironically, here's a comment I got from someone yesterday who was wondering something similar to what my trolls comment was, only this person asked in a nice normal way. Specifically, a subscriber named Anthony asked how I got such a high return in my portfolio in the last 8 months, especially considering that I'm withdrawing my dividends. So I'm going to answer Anthony's question, which will also help my banned troll to understand where he made his mistake. Side note, when I think of my troll, I picture some crazy dude banging on his keyboard in the dark with just the glow of his monitor shining off his perspiring forehead, hopefully not getting a heart attack as he rages over a trivial thing he misinterpreted in my video. And is it really worth losing your cool over what some random YouTuber is posting? Like, if it amps you up that much, then maybe you should just watch cute kitten videos or something. Maybe those calming zen fireplace videos are better for your personality. Anyway, most of you guys know that when I do my portfolio update videos, I show you my accounts and tickers in Fidelity, and then I also show you a summary view of my tickers in my spreadsheet tool. And this is a screenshot in that video my troll was talking about from July of 2024. I use a Chrome extension called TubeBuddy, which gives me some interesting stats on my videos, which is all that data you see on the right hand side, which isn't part of the actual videos I create. So like it says, I got 23.7k views on that particular video, and 235 comments were left on it, and I got 1,080 likes. In total, it says my channel has about 7 million views, and I have 79,800 subscribers, and I've uploaded 348 videos since I started, which means over the last 5.5 years. Scanning to the top of this screenshot, you can see that my total realty income share count at that time was 3,590 shares, and my total portfolio value was at $3.07 million worth of dividend tickers. Now let's compare that to my more recent video he was talking about. And here we see that my realty income share count did indeed increase, and now it's at 3,795 shares. So it increased about 205 shares, which is faster than its strip would have grown on its own, and you can see that O's price is 50 something a share, so you could guesstimate that probably 11 grand worth of shares were bought in the last year. OMG, freak out, liar, burn the witch, jump off a cliff. Or do what a sane person would do, which is either simply ask me, or dig a bit deeper on your own. I mean, if he had looked a bit closer in the first video, he would have seen a position I had at that time, called Toronto Dominion Bank, worth about 46 grand, which you'd no longer see in the second video. Or you could have simply watched all my videos and learned that I sold out of my TD position because they had apparently been doing money laundering, and I took that 46 grand and I put 35k of it into starting a new ticker in IDVO, which you should have seen in the second video, and I put the remaining 11k into my O position. So no, I didn't add any external cash into my portfolio. All the growth you see is organic from stock price movement and a bit of reinvestment, and yes, I am using almost all of my dividend income in all my accounts. By almost all, I mean I've been reinvesting about 20% of each of my ETFs basically into themselves, so my SCHD, DEVO, JEPQ, and IDVO share counts are slowly increasing, but all my other tickers have the exact same share counts. Bottom line, if you're super interested, you can always dive into each video and look at the numbers in Fidelity and correlate those to my spreadsheet and see how it all adds up. And more importantly, just watch all my videos because then you'd know when I do material sells or buys or whatever. That being said, if I come into a relatively small amount of cash that I wanted to invest, like 5 grand or something, then I'm not sure I'd even remember mentioning that in a video because it's only like 0.3% of my portfolio. The bigger the amount, the more likely I am to mention it, with large amounts being something I might do an entire video about. Anyway, to get back to showing an example of why my portfolio trended up in the last year, let's take a look at my PM position, which highlights things. So in July of last year, it was at 106 bucks a share. But then in the second video, you can see that it shot up to 155 bucks a share. Now, an old school stock like that going up 50%ish in less than a year obviously isn't normal, nor would I expect that to continue. But it doesn't surprise me that when the markets get rattled, then defensive stocks often get more interesting, especially if they have some potentially nice growth opportunities. So TLDR, and to answer Anthony, the last 8 months were simply good for my tickers. Sometimes my tickers do poorly and sometimes they don't, and overall they tend to trend up, and so even with me withdrawing all my divvies, I still did well. That all being said, some YouTube creators do indeed lie about things. Like I've seen dividend channels who made up fake portfolios they supposedly owned, and I've come across a dividend channel that created fake user accounts and left praise comments on his own videos, and I've seen 2 dividend channels that actually bought subscribers and or views, both of which later changed their channels to different niches outside of dividends. Now, doing something like buying views isn't exactly lying, but it can be illegal and shady depending on how it's done. Like if you spend money to buy YouTube ads promoting your channel or video, then YouTube is obviously fine with it. But if you use a third-party service which does things like buys you fake subscribers and or fake views, then that isn't legal per YouTube. And the main reason some people would do something like that is so they can quickly become eligible for making money on YouTube. You see, in order for your channel to start making money, you have to meet certain requirements, and the tougher requirements include that you need to have at least 1,000 subscribers, and you need either 4,000 viewing hours on your videos in the last 12 months, or you need 10 million views on your shorts videos in the last 90 days. I actually have never posted any shorts, so that was news to me. Anyway, once you have enough subscribers and views and such, then you can start earning revenue from ads displayed on your videos, with YouTube taking a 45% cut and content creators receiving the remaining 55%. The amount a channel earns can vary based on factors like the niche they're in, how much ad engagement they get, viewer demographics, etc. Generally speaking, creators can potentially earn anywhere from $1 to $20 per 1,000 views of a video. There's an acronym in the digital advertising industry called CPM, which stands for cost per mille, which means cost per thousand, where advertisers pay a rate for every 1,000 impressions or views of their ad. Finance videos like my niche are what advertisers often pay the most for, and my average CPM over the life of my channel is like 19 bucks. But things are a little more nuanced than that, because while advertisers pay based on CPM, we channel creators actually probably care more about something called RPM, or revenue per mille. According to Google, RPM is based on several different revenue sources, including ads, channel memberships, YouTube premium revenue, super chats, and super stickers. Some channel niches that are on the lower end of CPM include things like video gaming or movie reviews or cooking channels or stuff like that. Anyway, a key takeaway is that it goes against YouTube's terms of service to buy followers or fake views, so if you're thinking about starting a channel, then I strongly recommend that you just go slow and steady and don't get tempted to cheat. And it is pretty obvious when people do it. Like one YouTube channel creator that I used to talk to quite a bit, as he was in my era of people who started a channel at around the same time, bought 10,000 fake subscribers, and it was silly because we saw how some of his videos got less than 100 views, because he literally only had a few hundred real subscribers. So somehow he got that past YouTube and he got monetized, but it was illegally done and that guy eventually quit posting. Now, are there legit edge cases where someone gets tons and tons of new subscribers, but they never end up actually watching their future videos? The answer is surprisingly yes. For example, someone might start creating videos tied to a new trending topic, even though that trend isn't aligned to what their normal channel is about. Like when the government was handing out free money during the pandemic, some channels that were focused on real estate or whatever, they pivoted and started making videos about when more money was being paid and for how much and stuff like that, and they grew super fast due to people around the US that were Googling info on it. But then many of those channels' view hours dropped back to their old trend, even with all their new subscribers, because the vast majority of new folks that signed up to them weren't interested in their original content that they were previously doing. At the end of the day, you just want real organic growth by people who are interested in what you have to say. Now, to be fair, there are edge case examples of how someone's channel might grow or do something that isn't obvious based upon quick examination, but generally speaking, you can usually figure out what's going on after you've been doing this game for a while. Another reason why people might buy fake subscribers and views and leave fake comments is to fool people into doing things like signing up to their Patreon membership. I mean, if you see people leaving comments on someone's video about how awesome their Patreon perks are, it increases the likelihood that you might sign up to their membership to check it out. Bottom line, sometimes people will do inappropriate things, though it's also possible that it could be wrong in some of what I believe to be true, kind of like my troll was wrong, so I'm not going to name and shame anyone, even though I'd wager a pretty penny that my analysis is correct. But the vast majority of dividend channels out there are great and legit, so don't let a few bad eggs spoil your sense of the bunch. Okay, now let's switch from focusing on naughty kittens and instead recognize some super nice people, and specifically I'm talking about some of my subscribers who left amazingly nice comments to me, as I think those folks are much more representative of what today's YouTube dividend investing community looks like. I'm going to shout out 10 names of people who've left me really nice comments, and my plan is to shout out another 10 in my next video based on comments I've saved over time. So thank yous go out to Valid Game, Ways On, Jabir Rustam, C Mural, Choi Wook BB4HK, Bobby Singh 3095, Zachary Bond 78, Jack Lanzalotti 8117, Jimmy Huyn H Design, and Rod 910. Thanks folks, I really appreciate your super kind words. Okay, now to close things off, let's briefly talk about my favorite dividend ETF, SCHD. As many of you know, SCHD just did their reconstitution, which means some new stocks made it into the ETF and some were let go, all per the algorithm. But I don't feel the need to go over those nuances because you'd be missing a key reason why I value the ETF so much, which is that you don't need to track day-to-day stuff like that. If you're looking for a dividend ETF that tends to invest in quality stocks that pay a decent dividend, then SCHD is probably worth considering. But if you want the best total returns, then it's probably going to be hard to beat something like VU over the long run. VU actually pays a dividend, and having it in a Roth with a drip on will probably outperform most anything else as the decades go on, at least that's what I'd guess, but obviously I can't guarantee. VU's dividend yield is super low, and you need to be prepared to sell some of your stock if you need to generate more income from it. There's nothing wrong with doing that, especially since your portfolio will probably grow nicely, and you'll also probably need to deal with periods where VU will crash or go sideways. However, if you want to go with what I think will probably be a decent dividend income route, i.e. where you aren't selling your stocks but are still getting some decent passive income, then SCHD is worth considering, as your yield and dividend growth will probably be better than VU, but your total returns will probably be worse. So if you're in your 20s and have a solid job, then focusing on VU until you're needing income probably makes good sense. If you're wanting passive income now, then SCHD might make more sense. It all just depends on your goals and needs and risk tolerances and timelines. SCHD isn't magic and isn't ideal for everybody, but it is a good dividend ETF that is run by a solid company that should continue to enable solid dividend income. And that doesn't mean that its income will always trend up either. So if any of that bothers you, like if you freak out that companies that are reconstituted in or out, then SCHD might not be for you. I personally like SCHD because of how it works, and I bet I could completely ignore it, and many decades from now it will still be producing for my family. That's what I signed up for, and I won't freak out if it has some dividend payout pullbacks or whatever, because I understand how the algorithm and the process works. The older I get, the less I'll probably check what SCHD is doing, and the more I'll just be playing with my grandkids that I hope to have someday. For fun, I put all of SCHD's latest tickers and position sizes in a spreadsheet, and I found out that energy stocks seem to be about 20% of it, which is a lot. I mean, compare that to VTI, where we can see energy is only about 3.5% of the overall market. So does that worry me? No, it doesn't, and you should also know that my portfolio already has 11% in energy stocks, which I feel is a reasonable amount for my situation and belief in the future, and I also have 6.7% of my portfolio in SCHD, which effectively means that another 1.35% of my portfolio is in energy stocks. I know that SCHD just follows an algorithm to pick its stocks, and that its tickers should have 10 plus years of dividend payments, and a float-adjusted market cap of at least $500 million, along with a good trading volume. I also know that SCHD prioritizes tickers that have decent free cash flow to total debt and better return on equity, dividend yield, and 5-year dividend CAGRs. So sometimes oil stocks will make it in, sometimes consumer staples might, and sometimes blah blah blah, and having a heavy sector waiting for a year or whatever is just part of what can happen. The beauty is that I believe that SCHD will mostly hold decent companies at any point in time, even though I personally might not invest in any individual ticker they own. But that's the nature of ETFs. You also probably wouldn't invest in every individual ticker in any ETF you own, but you still like that ETF as a whole. For example, maybe you're someone who hates energy stocks or tobacco stocks, and so you refuse to invest in them at all. But at the same time, you have no problem investing in the SP 500, even though it holds tobacco and energy stocks. Like think of VU and the SP 500, which so many people own. VU has Altria in it right now, a tobacco stock, and if you own VU, then that means you effectively own tobacco stocks. That doesn't mean you support tobacco stocks or whatever, but it is what it is. Owning an ETF is kind of like outsourcing some of your portfolio to be managed by somebody else, and that other person buys stocks that fit the goal of the ETF. So whether we're talking about VU and how it tracks the SP 500, or we're talking about SCHD and how it tracks a dividend index, they both seem like reasonable strategies to me which let me sleep well at night, and that should work out fine over time. And case in point, a way it just worked out very nicely is that with SCHD's latest change, it means they effectively did a huge 20+% hike relative to what they paid out in a year ago's quarter, which is pretty awesome, even though I'm confident it won't continue with that trend. My guess is SCHD will be a great long-term investment for me, and it will no doubt outperform many of my individual stocks, as some of them will probably go under at some point. Like I bet that if my portfolio was left on autopilot for 50 years, then a decent portion of my tickers could go under, whereas I bet Schwab will still be around and so will SCHD. But hey, no one really knows what the future may bring. Lots of things could happen, and all we can do is try to invest intelligently and not panic sell. Sometimes things will go better than anticipated, and sometimes they won't. The only thing I'm confident about is that there will be multiple stock market crashes in my future, and I wouldn't be surprised if my portfolio fell from over $3 million today down to 1-point-something million in the future. That's just the nature of the market. I'd go from lots of overpriced tickers in my portfolio to lots of underpriced ones, but I bet that most would keep paying me solid dividend income regardless of the market crash. You gotta just invest with your eyes wide open, even though you don't know what the future will bring. And that reminds me of a great Mark Twain quote that a Patreon of mine on my Dividend Discord just shared, and it goes, "The secret of getting ahead is getting started." That's so true for pretty much everything in life. Don't tell yourself it's too late to start your dividend passive income from flowing in, just start. Whatever it is, just do the hard thing and begin that journey. Start working out, start writing that novel you've always thought would be fun to do, start your YouTube channel and grow it slowly but legitimately. Whatever it is, the best way to get ahead is to take action and just start. And with that, I also ask you to start hitting that thumbs up button, subscribing if you haven't yet, and click that bell notification. And now I'd like to call out my latest Patreon aristocrat who just signed up, so thank you Psy4328. Whatever you do, don't forget to join my free Dividend Discord chat server, which has over 11,000 dividend investors on it from 85 countries around the world. Thanks for watching, stay positive, and I'll talk to you again real soon. Remember, I'm not a financial advisor, and my videos are for entertainment and inspirational purposes only. Investing of any kind involves risk. I'm only sharing my opinions with no guarantee of gains or losses on investments.